conversation with the pioneer of technical analysis in India, only on ET Now.
We've been looking at how you can use Fibonacci retracement levels as well as projection levels to enter into trades. We've looked at a lot of charts. Let's try and get a trade set up now very quickly. Doc, you've chosen M&M as the stock. Tell us how you can actually make money using these retracement levels.
Yeah, I have actually used Mahindra & Mahindra a little earlier in the date. Now, if I look at the chart here, what I find is that the chart is showing me sort of minimal retracements, right? When I put this on, this is about 23%. When I take it up here, it's another 23%. And like we said, when it is 23%, it's going to give us a lot more on the upside. The trend is stronger. So now I'm going to make a projection because I don't have anything to the left side, right? So I'm going to make a projection. I'm going to use this as my reference swing. So I take this as my reference swing and project up from here. Now I will have a projection of 1.618 and 2 and 2.618. So when I push this out into the future, here is what I actually get. Now when I go up here, this is my one level, and you can see that the stock had a kind of consolidation there. And when I look at it further, this is my 1.618 level, which is where the market actually had some amount of, let's say, topping action. And then when it goes up further, then this is where I get my 2.618 projection. So using the fact that Mahindra & Mahindra showed me a very, very limited kind of retracement, it told me that the stock was in a strong trend. I use that strong trend aspect to make projections and using the 1.618 and 2.618. So what I had on at about 325 to 350, I could ride out the trend right up to 760 if I had the courage to hold on, of course. But then the chart pointed out that this was a possibility. Now, whether you rode it up till 760 is another question.
That's a matter of how much risk you wanted to take. But these are numbers that you use to come up with target price levels.
Absolutely. That's what we use them for, because at 760 there's nothing else which is showing you how to arrive at a price of 760.
Okay, so 1.618, 2.618. Remember those numbers and not forget those in a hurry. Time now to go to our trader profile for the week. Time to get inside the mind of a trader now.
Well, with the IPO boom in the early and mid-80s, I saw that there were individuals involved in the markets, brokers and traders, who had a fantastic lifestyle, great houses, great cars, beautiful wives, and I thought, well, why not get involved? I've got a beautiful house, I've got a lovely wife, nice car. Still working there. Well, my personal style is longer term trend trading, so I look for big macro trends, but then within that trend I'm looking for fundamentals to act as a catalyst. So I'm looking for a kicker in the markets, be it a news announcement, a broker research report or earnings, to act as a catalyst and to push my position higher in the short term. The biggest hit was early in 2000 at the height of the tech boom, going short over that period and maintain that short position for a couple of years. To stay disciplined, stick to a particular method, a method that does suit you and suit your personality. And to keep a track record of everything that you do, you need to keep a diary of all the transactions you make, the profit and loss, and this is basically your scorecard. So don't focus so much on the money aspect, focus on improving your score. I use longer term trending indicators such as moving averages, and then for shorter term entry and exits I'll reduce the time span of those indicators as well. So those indicators are designed to maintain and stick with the longer term trend, but then also to get you in at the start of a big move. Well, Steve Cohen, the hedge fund manager of SAC Capital, he charges a fantastic amount on the money he manages, but he is that good because he does that well out of the markets. One of the most profitable hedge fund managers out there. And Richard Dennis, who's been profiled in Market Wizards, this is a man who took a few $1,000s and ran it up to $100 million within 10 years. Well, my favourite book would have to be probably Market Wizards by Jack Schwager. It's about 20 years old. It profiles all the top traders in the US at that point in time. But it's a fantastic book. It covers various different styles of trading, but there's a common theme running throughout the book, and that is risk management, which is the key aspect of successful trading.
Fascinating to see how traders actually work and how they think, and each trader's mind is unique in itself, and so is yours. So keep at it, and I'm sure you'll see success at some point. Let's get to our chart quiz now. From last week, we'd asked you to talk about Crompton Greaves and SPI and see which are the replies and which are the analysis that have actually made the cut.
Okay, thank you all for writing in as usual. In fact, we were surprised this time, and very pleasantly surprised, I must say. We actually got a letter from all the way from Assam. The stocks that we had asked you to analyze were State Bank of India and Crompton Greaves, and the entry that I picked as the one which had the most lucid sort of analysis is from Renu Goel. Very nice charts with proper set of annotations and drawing the correct set of conclusion. A job very well done. Another point on it which I shall briefly touch upon later. Now, just a point that which I wanted to illustrate here, the choice of Crompton Greaves as a stock was very deliberate because it had had this huge fall. And most of the time people have great difficulty in dealing with stocks which have a very large fall or a very large rise. Now the typical approach is to always look for a support and for the stock to bounce, and I think almost everybody who wrote in about Crompton Greaves has said that here is a place to buy. This is a stock to buy for a bounce, and I think only the prices varied, 140, 150, 160, etc. But I think a lot of people said, look, to buy the stock. Now, why would you want to buy a stock which is just plowing its way down? Look at the chart. After those two big downs around 16th of July, it just made smaller and smaller and smaller moves, but every move was lower. So don't be in a rush to put it in. Renu Goel was among the few who said that the stock would go down. It's not that it will reach what target she said, but then I think it's always better to pay respect to the trend and not get in the way of it. That's one thing to remember about stocks which move big time.
Let's move on then. For next week, we'd like you to put your minds and analyze for us the Nifty once again and LNT. So those are the two charts that do write into us with your analysis, and we'll tell you which way the stocks actually were expected to move. All right, with that, we've come to the end of this show. We hope you enjoyed learning about the fascinating world of the FIB series, and try and use them because I think they really are up there in the toolkit of most traders, and they rank fairly high in order. And maybe read up a little bit more about it if you thought that what we were able to tell you was just the tip of the iceberg, so to speak. But we'll see you again next week. Till then, keep investing, keep trading.